The world's biggest car companies are investing billions of dollars over the next few years to update their model lineups with electric vehicles. More EVs were sold in 2021 than ever before, and that growth isn't slowing down. Clean cars are becoming more accessible and affordable. They're also more desirable, particularly among consumers anxious about their carbon footprints. As Paolo Montecillo reports, the shift has cleared the road for the likes of Tesla and other young car companies to enter the market and challenge its decades-old giants.
The Nissan Leaf is one of the first electric cars to go into mass production, and it was the world's best-selling battery-powered vehicle for more than a decade.
Because we are the pioneers, and we launched our first battery electric in 2010 when market didn't exist and customer didn't ask for it.
These days, Nissan and other traditional car giants are falling behind. The Tesla Model 3 overtook the Leaf in sales in early 2020, and Elon Musk's car company has become the biggest name in EVs. In October, Tesla became the first car maker in history to reach a market capitalization of $1 trillion. That means despite selling far fewer cars, it's now worth more than Chrysler, Ford, and General Motors combined. And it's joined Silicon Valley's biggest companies, Apple, Microsoft, Alphabet, and Amazon, as the only US firms with 13-figure valuations. Tesla reached the milestone after its $4 billion sale of 100,000 cars to rental firm Hertz. Industry insiders say the deal should help steer more customers to electric vehicles.
I still don't think that the average person is looking for Tesla as their next new car. Having them available at a Hertz dealership or a Hertz rental counter, that changes the whole audience, and it could make it so that you could rent one for a relatively low price compared to the price of a new car and find out whether or not this is for you or not.
Tesla's not the only EV company that's racing up the ranks. US startups Rivian and Lucid went public this year, and at various points, they were both valued more than Volkswagen and Renault. Analysts say newcomers have clear advantages over old car industry players.
The old organizations, the old companies, they're too slow, too big, there are too many brands, too many models, too many trims to kind of manage. Working with old technology with an inefficient supply chain, with a focus on EVs that Tesla had and now Rivian also has, they're in the right market, the right part of the market, the hot area of the market. EVs are booming around the world.
The International Energy Agency expects electric vehicle sales to grow 30% a year until 2030. Governments are encouraging the shift with subsidies and tax perks as they try to meet emission reduction goals. Those incentives could ensure there'll be enough demand for companies leading the charge and their rivals trying to catch them. Paolo Montecillo, TRT World.
Daniel Ives is the Managing Director of Wedbush Securities in New York. He tells us what to expect in terms of growth in EV sales and which companies will benefit the most.
We're starting to see massive customer adoption from traditional cars to EVs. Today, it's only 3% of automobiles in the world. We view this green tidal wave as a $5 trillion market opportunity. China led. Now we're starting to see US as well as Europe catch up. We have EV demand doubling over the next 12 to 18 months. We think it's close to 5-6% of autos by 2022, 10% by 25. And you go out to the rest of the decade, it could be 25% auto sales. And that's why right now, this is a fourth industrial revolution in EVs. It's not just Tesla, Rivian. You got the stalwarts like GM, Ford, VW, and others. And there's really an arms race going on in EVs. We view it as the biggest transformation to the auto industry since the 1950s. We don't view it as a zero-sum game. It's not necessarily Tesla or the other vendor. I mean, you're going to see a massive adoption that's going to have multiple winners. I think Ford and GM are re-rating names as they go toward EVs, as well as VW. I think Tesla continues to have an ironclad view of the market. But then you look at names like Lucid, you look at NIO in China. This is just the first inning of this all playing out in terms of EVs, which is why we're bullish, not just on tech, but on the EV space going into the next 12 to 18 months. But we see GM and Ford as really in pole position to gain share. I mean, they've almost dove into the deep end of the pool when it comes to EVs. You look at GM, They're going fully EV by 2035. You look at Ford with their F-150 Lightning. And I think we're going to start to see it's a re-rating too from a stock perspective in names like GM and Ford as investors start to give them a disruptive technology multiple. That's why we're bullish on both those names as well as the broader EV sector. And I think you play with a basket. You're going to have Tesla, Rivian, some of the pure plays. GM and Ford, I view as sort of 2022 being inflection years for both those companies.